All right, good morning. It is very nice to see you all, in many cases, once again at one of our Finance Endowment Network webinars. Welcome, Aziza, Edward, Goleka, Natasha, Nate. Probably can't take you all here, but Sifiso is here. We know Sifiso. Alicia is here. We know Alicia too. Amos is here. Yeah, please pop on your chat, and there's a button at the bottom of the chat where you can change who you're chatting to. Please change that to everyone so we can all see who you are, and it'd be great if you can introduce yourself, maybe where you work, what the weather is like, maybe for the people in Durban, how you're doing, if you need a little bit of venting there. See, Karen's there. Karen's a colleague of mine who is staying in Pretoria, which is true. So we're looking forward to this thing. We're going to officially kick off the webinar in about exactly 70 seconds. I am not Kaylin Fourie, who is the person who invited you to this webinar and was going to be hosting it, but Kaylin doesn't have a voice today, so I have the privilege of standing in for her and spending some time this next hour with our fantastic panelists from Absa CIB, who I'll be introducing to you in a bit. You can already see them on camera with their names. So in the meantime, you can stalk them on LinkedIn and admire their CVs. But we're going to be kicking off just now. So please do use the chat. Let us know who you are, and we're going to be hopefully using the chat a lot as well to engage, ask questions, ask for clarifications if something is not clear. We are here to learn about a very important topic. So this is your opportunity. Don't have that question in your head and then wait until 12 o'clock and then the webinar is over and you won't be able to ask it anymore. So please do that. I think it's a good time to officially start, and then later we'll let the people who are a little bit late know that there will be a recording, but they will miss out on the live experience. So that's a bit of a shame. I'm going to stop sharing this screen for a little bit because I never know if I'll be sharing my script by mistake. I don't think it is the case, but let me be certain. Anyway, we've got Mosa Tshabalala here. Everyone on the panel works for Absa Corporate and Investment Banking, so I'm not going to repeat that. The Absa CIB is a great partner of the Finance Endowment Network and CFOs South Africa, so we're really grateful for their support and all the insights they bring to the finance community in South Africa. Musa is the head of FI Sales and Risk Distribution. We've got Karen Matsiko, who's the head of Working Capital Product Management. And then all the way in Lagos, where they do dress appropriately, it's Oladapo Adeigbe. We're calling him Dapo, but and he says that's okay. He's the head of Trade Finance and FI Trade Sales, but obviously based in West Africa. So in the meantime, let me just kick off by positioning the topic. We're going to talk about the largest free trade area in the world. And we don't have a quiz for you to guess what that is. It's obviously the African Continental Free Trade Area, which has a beautiful acronym as well. It's existing since the 1st of January 2021 officially. Brings together 1.3 billion people across 55 countries. None of this kind of stuff exists across other parts of the world, so it's pretty unique. Combines a value of $3.4 trillion US. And obviously the point is that it has a potential to uplift a lot of people out of poverty by breaking those trade barriers. There's opportunity there for commercial banks, developmental financial institutions, fintech, and other players to really make use of this free trade area. And I think that's what we're going to be talking about. And we're also going to be looking at why this is relevant for finance professionals, where there could be potential benefits for you, opportunities, etc. We're going to hear from Karen and Dapo a little bit later. Karen will talk about digitization. Dapo will also talk about partnerships together with Mosa. But I'm first going to be handing over to Mosa, who will unpack the trade finance gap and how it's currently stifling growth. And then after that, we'll link that with the free trade area. I'm going to put Absa's beautiful slide up. This was on, and then there we go. So Mosa, I'm going to head over to you now. In the meantime, I think Karen and Dapo will go off camera for the time being as Mosa presents, and so we carry on.
Thank you so much, Joel, and good morning to everyone. I think it's such an honor and a pleasure to be engaging and connecting with the captains of industry this morning and talking about a topic that is quite, close to Absa's heart, and that is trade, and of course, then how do we as commercial banks, work together with, yourselves and other industry players to help close the trade finance gap that we know and that we see. I think a good starting point would be for me to give a bit of explanation as to what what a trade finance gap is in simple terms, right? So trade finance gap effectively is the ability for businesses to access financing in order to actually support trade finance activities, right? And I think as that the recent research done by the Development Bank of Asia, they reporting that the current trade finance gap globally sits at about $1.7 trillion, right? That is a 15% increase from the 2020 number. Obviously, that indicates that, globally, in terms of trade, we have slightly regressed. And if we hone on the, beloved continent, if you look at the trade finance for the continent, it sits at about between 80 and $100 billion, right? Depending on the report that one or publication that one is looking at. But then what does this mean and where are we? And I think, Joe, in his, opening remarks, he mentioned that on the 1st of January 2021, the FCFTA came to effect, obviously with the aim to, create the free trade area, which is, I think, is the largest free trade area in the world at this stage, bringing 55 countries, under one, roof in terms of trade. And then if you look at the intra-Africa trade, currently where it sits at about 16% of the Africa trade. I think just to provide some context as well. So if you look at the intra-Asia trade, as a total number of total Asia trade, it sits at 52%. And then the North America intra-trade, North America trade sits at about 50%. And then if you look at the intra-EU trade as in relation to the EU trade, sits at about 70%. So that, I think, indicates and shows you how far we are from a continent perspective in terms of where we need to get to. And we believe that, I think, when the AFCFTA is, applied or, concluded appropriately, it should actually, bolster the intra-Africa trade and take it to about 52% over the next 5 to 10 years. So again, we've been following the intra-Africa trade story since the beginning, and and we know that there are various work streams that are happening in terms of ensuring that the convergence of the physical supply chains, of course, then the geopolitics come together. And I think once that is executed appropriately, we'll then see the benefits that this initiative, the geopolitical initiative, will achieve. So what is the potential though for businesses in this regard? Again, a single market which brings GDP, or which account for $3.4 trillion GDP, and then you're looking at the potential infrastructure of $1 trillion over the next 10 years on the continent. And of course, then with the biggest benefactor of that, or beneficiaries of that, would be the SME sector, which account for about 80% of the businesses across the continent. And this particular sector employs 70% of the labor force on the continent. So I think it's key and important for this initiative to come to the fore, so that, of course, then we begin to see the fruits, obviously translating into the GDP that is estimated to be about 65 billion in the next 5 years, 5 to 10 years. If the intertrade, if the FTA is executed appropriately. So I think from other business opportunities, I think given that it'll effectively allow businesses to do trade far much cheaply, it then opens up new markets, right, for business. For example, if I were to say maybe a current beef wants to go and start, distributing, some of their produce to on other continent, in other countries across the continent. So from an Absa perspective, we can work with them to effectively open up, shop in for example, Kenya. Because we've got, bricks and mortar on the ground. Our guys understand the market very well, the fundamentals of that market, taken into account, and therefore LCs can be, or letters of credit can be issued to help facilitate the transactions that are linked to the exports of, beef into that market or any other market. So I think maybe if I were to magnify a little bit the issue of the e-commerce aspect of where we are in terms of the FTA, and I think generally broadly from a global perspective, I think there's a question that continues to be asked more frequently now, which is how meaningful are the current financial technology systems that are being rolled out globally. How are they impacting the day-to-day lives of entrepreneurs, financial institutions, and developmental financial institutions, or multilaterals or government institutions? I think that is a pertinent question, and I think there's a big drive by fintechs, trade techs, financial institutions, DFIs, to actually start making that world more meaningful to entrepreneurs. And I think we as Absa, we continue to build around that so that we continue to support our clients, which is yourselves, in ensuring that we work with you as the world of banking, the world of trade finance continues to evolve. So I'll pause there, in terms of my intro or against this backdrop. I'm going to now hand over to my colleague Karen Matsiko, who will then speak about how digitization forms part of the trade finance ecosystem. Thank you.
Thanks, Dapo, for that comprehensive background on the African Free Trade Agreement as it relates to trade. I think it's important for the audience to understand what this means. So I'll be talking about digitization, and just for context, trade finance dates back to thousands of years back in Mesopotamia, with letters of credit actually discovered on clay tablets. That shows that trade has been here for a long time. However, trade finance, we still have rubber stamps that underpin the documentary credits today. So as much as we've come a long way with trade, as an example, paper is still only enforceable in courts of law if there are any disputes, just for context. So the trade finance ecosystem is interesting because it's a big variety of a lot of players. We're talking about financial institutions, we're talking about clients, logistic companies, insurers, procurements, ERP providers, to name but a few. If there's one thing that COVID-19 revealed to us, it showed us the fragility in the way that trade finance functions. And what has become apparent is that digitization is imperative in keeping the engine of business running, which is trade finance in this case. Multinational corporations like Absa have begun to leverage digital technology that improves the overall supply chain system, as well as increases transparency, which I think is key to doing any business. So apart from the often spoken about blockchain, there are other forms of digitization that form part of the overall trade finance ecosystem. Some topical ones today are the KYC automation as an example. This deals with the various frictions where the need to onboard clients faster and in the safest way possible is an increasing urgency from not just clients, but regulators and corporations. Centralizing KYC as an example just increases the way credit assessments are done, using AI technology, using algorithms, to name but a few. So the faster it takes to onboard and deal with the KYC issues, the faster it is to do trade. Bill of lading. I think this was one of the biggest pain points that we faced when the world was on full lockdown. I mean, it's still paper, as I mentioned. So we're still, we still have a lot of work to do, for lack of a better word. Logistic companies had to think outside of the box by creating e-bills of lading. So this reduced passing of hands, it reduced costs, and it removed red tape. Even if it was widely used during the peak of COVID, there's still so much work that needs to be done. Non-fungible tokens that a lot of people are talking about today, otherwise known as NFTs, are becoming bigger and bigger in the trade context. They're unique, interchangeable units of data stored on a digital ledger. So an NFT becomes relevant when a trade finance document becomes tokenized. This is using blockchain technology, but taking it to the next level. So Mosa, of course, talked about the African Free Trade Agreement. It will be remiss of me not to mention what's happening in that world. The Pan-African Payment Settlement System that was launched by Afrexim Bank this year. I think it's a brilliant way on how Africans will be doing business. This platform facilitates African currencies moving around for cross-border payments. As an example, typically we would have to convert, say, I'm a trader in South Africa and I need to ship something over to Kenya or pay for goods in Kenya. What typically would happen is that I would have to convert to US dollars and send those US dollars. The Pan-African payment system, what it does is that I can send South African rands and then the recipient in Kenya will receive Kenya shillings. So this basically expedites the speed at which trade happens, which is imperative. There's also talk of digital passports that, even if it seems unfathomable right now, it actually is very possible, and it will eliminate the need for us to have paper passports. So travel will be really quicker in that space. So if there's anything that I can say out of all of this is that digitization is no longer an option in trade. If any business is not thinking digital or has a digital lens or strategy, it cannot survive in the medium to long term. This has become part and parcel in doing business, hiding under a plethora of paperwork or having so many touch points or wet ink is slowly becoming a thing of the past, believe it or not. Digitalization is here to stay, whether or not we're ready. It's a fast moving train. The archaic analog way of doing things can't last much longer. So lastly, in a nutshell, just to bring everything together, digitization has formed a big part of Absa's strategy in the past 5 years. We continue to enhance and build our digital capabilities using APIs, partnerships with fintechs. For example, with the rollout of Absa Access, what this means is that our trade management online system can be accessed on a single sign-on for clients. So clients in the confines of their own space are able to, say, amend letters of credit on this system without having to go to a physical branch. So what this means is that this is really happening. Digitalization is no longer an option for businesses. We have to jump on this fast moving train, especially trade that I think has been slower than all of the other businesses across the world and is slowly having to pick up, especially with crises like COVID-19. That being said, I will leave it to my colleague Dapo to continue on the next topic. Thank you.
Thank you, Karen, and also thank you, Mosa. I think for me, I think it's important that we then provide some kind of context around how do we then close this gap and how we as Absa has been, working with partners across the globe to close the trade finance gap in Africa. So to start with the context, Africa's share of world trade currently sits at 3%. It is then one of the desires of the Continental Trade Agreement to increase the African share of global trade. And AFDB, in one of their research work, clearly indicated that should Africa's share of world trade increases by 1%, there is a possible revenue uplift of $70 billion. And this for them represent 300% of the aid and grants that currently come to Africa yearly. Which then means that if trade activities are done and enhanced and the trade finance gap is bridged, there is then the tendency for Africa to be able to feed itself without recourse to grants and aid. And we can also look at the other context, which then is the fact that Africa economy depends on sales from commodities to facilitate other activities within the economy. What this means is that should there be fluctuations in the commodity market, it will immediately impact the earning capability, the GDP growth, inflation rates in all the countries. So they need to bridge that gap for trade, and to then increase activity is very important. So I think that would then take me to what is then responsible for this gap, because it is important that we have an understanding of what is responsible for the gap. For me, and as many publishers have said, is the fact that the currency and language of international trade remain predominantly US dollars. And the ability of African markets to earn dollars is very restrictive because of the dependency on commodity trade. So as long as African economies have shortfall in their capacity to earn dollars, we then impart their FX reserve and consequently impart their ability to then talk about the amount of import cover that those FX earnings could control. Then there will be challenges in their ability to provide that financing gap. On the other side is then the issue of regulation and the issue of other areas of investment that financial intermediaries into Africa could then put their money into, other than emerging market. They could put their money into Turkey other than coming to Africa. So this is also causing a gap in the ability of Africans to even trade among themselves. And the final one for me would then be in the ESG campaign. The E, which relates to environment, has been discussed extensively. And we can see that a lot of financial funds coming to Africa are tracking ESG compliant trade. Because of this, you can then see that the value that is being thrown at other areas in Africa where we're not at the level of the advanced economy in terms of their ability to be ESG compliant is then limited. So this inflow is then limited in terms of the support it could provide to trade finance within the African continent. And I think these 3 points, if you look at them critically, are very, very, very important in terms of how we can bridge the gap. So where does Absa then come in here? For us as Absa, we have significant experience within the African market. And it is very clear that for Africa is a good mine of opportunities everywhere you go. It's a very youthful population everywhere you go, very vibrant population, hardworking people. You have opportunities in infrastructure, which has a huge gap. You have opportunities in power within the African continent. You have opportunity to invest in manufacturing and with the capability to diversify the FX earning of each of those markets. So within Africa, there is a lot of opportunities. However, there are also landmines within Africa. Regulation is one of them. And I think the cost of understanding this regulation, understanding this risk, sometimes becomes too heavy on corporates, regardless of wherever they are, to then invest in Africa. The other, the political risk that is very inherent and bright when it comes to Africa, and which also becomes an hindrance from investors into the African market. As Absa, because of our footprint within Africa, geographically we were present in major economic zones within Africa, from the west of Africa to the east and southern of Africa. We have deliberately set up our footprint to also coincide with major trade routes within Africa. Hence, we have a very deep understanding of the African terrain, the African experience, the regulatory environment, and the opportunities that are inherent in Africa. That has also helped us to then set up our non-presence country strategy where we're not present. We have resources that have deep understanding of the regulatory environment, of the exchange control environment, of the opportunities in even our non-presence market, which include the north of Africa going into the Middle East. We have also set up shops in various areas across the world, in the US, in the UK, in China, just to ensure that we tap into the connectivity between Africa and the rest of the world. As I said earlier, risk management is very important for us, and our boot on the ground, our dedicated resources provides us with that opportunity to be able to have a deep understanding of the risk environment, and therefore having the capability to sit around the table and advise our clients South Africa outbound, regional corporates, and specific corporates in each of our presence and non-presence markets on the landmines and gold mines that are inherent within the African continent. And we're very proud to say that we've been able to handhold significant numbers of corporates across Africa, and we've been able to connect the dots with exporters into Africa as they were. As an Africa-focused organization, we have dedicated balance sheets to the continent. We have dedicated balance sheets to then block the gaps that are inherent, the gaps that the absence or the reduction of trade facilitation by international agencies has caused. So this balance sheet commitment is then spread around our corporate and investment banking clients and our business banking clients. So we are then focused on all the tiers of economic activities, which has the capacity to then increase the employment rate in Africa, which is then the biggest concern. The final one for us is partnership. Partnership with development financial organizations and multilaterals are a very important part of our business. We have partnership with DFIs in Europe, in the Americas, and in Africa. Just recently, a couple of years ago, we signed an agreement with the CDC, which is more than 250 million. We have huge partnership with the IFC. In fact, last year we were named as the best bank, trade finance bank in Africa because of the opportunities and the business that we do with the IFC. What does this partnership do for us? First, it increased our ability to then provide trade finance assistance to the rest of the continent. It also assists us to go into high-risk environments in the rest of Africa and provide trade intermediation, thereby reducing the trade financing gap that is inherent within the African continent. It also allows us to deal in some sectors in a larger scale than we would have done. So these partnerships are very important in our trade finance adventure within the African continent, and we will continue to leverage on them. It is not limited to those two. We have huge relationship with the Afrexim, with AFDB, and we're growing these relationships across the globe to ensure that we increase our ability to intermediate within Africa. For us as Absa, we will continue to be the leader in terms of first to market, in terms of setting up primacy relationship and hand-holding corporate and business banking partners across the globe. We will also ensure that the value that we've created in our digital journey, which has the capacity to reduce the cost of doing business, and that costs that we have reduced, we will then pass some of them on to our clients. And we think this is a good area for our client to then begin to look at us as a partner of choice. I think for us as Absa, the question then is, who would you rather do business with? You would rather do business with an institution that understands the market, that is well positioned, that has resources to cover the rest of the continent, that can handhold you across the continent and even beyond. Thank you, everybody. I will hand over back to Joel.
Thank you very much, Dapo. I'm going to stop sharing. It says on the screen Q&A, so that's right. And then Karen and Musa, if you also want to come back on camera, then we can start fielding some of the easy and the more difficult questions. Musa was looking forward to the difficult ones, I believe. And then Dapo, you can also say on camera if you want to. Musa, you also said you might want to chip in a little bit about Dapo's presentation. I don't know if you want to move to the, shall we move to the questions, or was there anything you wanted to add?
I think fully covered by Dapo. I think for me, the key part to that is the partnerships that we have built, right, with financial institutions, with developmental financial institutions. Now looking at also insurance, we're looking at, export credit agencies, as well as institutional investors to continue to support, our clients as far as, extending balance sheets so that we can support their trade finance activities. So we are very deliberate about closing the trade finance gap from an Absa perspective. So yeah, I think that would be the only sort of additional to what Dapo has covered. Thank you.
Okay, super. Yeah, we've had some questions in the chat already, and Kaylin's also chipped in. Obviously, she's helped us prepare this webinar in the first place, and we were supposed to be looking at her here instead of me. So apologies for that. But I think I just want to go to Para's question from earlier, and I'm just quoting here because I've got it on the side here. He was asking, can you give us an example of how Absa has been innovative in the trade finance transactions? So how are you guys sort of helping finance people sort of leverage the opportunities that there are now, I suppose, with the trade area? And I could almost ask this question of all of you, right? What is your personal favorite thing that Absa does in this space? If I may put it that simply. I don't know if you want to kick off with that, Mosa, and then see if Karen and Dapo want to chip in.
Yeah, thank you so much. So I think for me, critically, and I just touched on it now, right, in terms of the partnerships that we have constructed in supporting, balance sheets, right? Let me maybe give an example, right? So if we've got a requirement from an SME, to support their trade transaction, which is maybe way larger than the size of the balance sheet, right? And we then, draw to market, right? As I said, we've partnered with DFIs, we have insurance capabilities, we have ECA capabilities. We also work with other financial institutions, right, through the mechanisms that we put in place to be able to extend greater balance sheet support to that SME. A lot of banks, don't have the capability to do so. And then, of course, I think from sort of a digital perspective, I think, Karen spoke about, the system TMO, Trade Management Online, that we have, which then allows, it's a system that allows our clients to effectively do trade transactions easily online, submit their request in terms of LC issuances, guarantees, etc., which then expedites the execution of trade transactions. And we know that speed and process of processing transactions under trade are quite critical, because obviously they have a cost factor to them, and of course then solidifies and establishes either the exporter or the importer with their partners. So I'll hand over to any of my colleagues to also chip in there.
I'm definitely in full agreement with you, Mosa, regarding what Absa is doing. I think us being a fully Pan-African bank now, it's in our vested interest to understand the African landscape and to create solutions that are bespoke to our African markets. So, something that might be viable in South Africa might not necessarily be viable in Kenya. That's why we're always in partnerships with fintechs, trying to source what's the next big thing to ensure that our clients have ease of access to systems, to my point earlier, Africa Access is a big thing that was a pain point for a lot of our clients who said, I have to sign into multiple platforms to be able to access my product systems, and having a single sign-on option, to me, I think is amazing in the sense that clients are no longer inconvenienced, and they can do things much faster without having to go to physical branches, which is slowly becoming a thing of the past and is very expensive.
Dapo, do you want to add on to this?
Yeah, I just want to give a specific example of our Pan-Africanism and what we were able to do in Kenya with a particular client that has a United Nations contract. We had couple and series of meetings with the client to understand their needs and to then understand what the financing gap is, and to understand whether there is a fit for purpose product within the Absa environment. What we did was then to create a bespoke solution that then answers the financing gap and need of this client. And what this has done for the client is to then created, for the client, it has created much more in terms of the ability to win more contracts from the United Nations, which then moves from their initial contract agreement to other areas within the African continent. Because this is a solution that the client has been looking for beyond now and has been unable to package because of most of the funders they've been speaking to had an handshake issue between their corporate and their FI team. But we're able to bring in the capability and resources to then harmonize the corporate capability with the FI capability and come up with a bespoke product for the client. So for us, as we say, we do not just create products. We create product that answers an immediate question in line with then our risk acceptance criteria. So the client is really, really happy with us, and we have gotten repeat business from the client, and we're beginning to follow them to other parts of Africa where they're winning new contracts.
I love that answer. Nice concrete example. Thanks, Dapo. You spoke about one-click, Karen, and I just wanted to ask, if there's time, I'll ask you plenty about NFTs later, but I'm not sure if we'll get to it because there's a few questions from the audience along. But one of the questions that I also chatted to Kaden about beforehand was that obviously a lot of the tech systems at the moment for trade are being developed for what shall we call it, first world, or for the whole world, and not really with Africa in mind. Is that an issue? Should there be? Should something happen here? Are there current systems that you would recommend? Where are you in this space?
I don't think we have an issue in Africa because I think Africa understands its landscape. It understands what works, you know. To me, that's why we have hubs in Kenya, we have hubs in Ghana, we have hubs in Nigeria, where people are actually developing systems that work for the African market. I think maybe 10 years ago, we would talk about having to go into first world countries to try and source technology, but that's slowly becoming a thing of the past. You know, Africans are really starting to build their own technology, our own technology, to ensure that it is relevant to the African market. I think the African Free Trade Agreement just strengthens that, and that's why everyone was excited about the PAP system that Afrexim Bank created, because it's something that has been spoken about, but for it to actually come to, you know, to life shows that Africans are really being deliberate and clinical in the way we're doing things to ensure that with the African Free Trade Agreement, technology is, is basically helping us ensure that it comes to life, you know, and we don't have to rely on the global world to ensure that trade happens in Africa. Africans are definitely well equipped to handle trade today.
Great. I just want to hop all the way back to the beginning of the webinar when Koleka Tokwe from the Eastern Cape Gambling Licensing Authority asked what change or impact of policy impacts you guys expect in South Africa itself, specifically with regards to tax, for example, when it comes to the trade area. I don't know who's the right person to answer. Maybe Mosa.
Yeah, thanks. I wouldn't really address that in particular for Africa, but for South Africa. But I think the AfCFTA as aim is to ensure that there's the tariff barriers are addressed, right, or the cost of doing trade across the continent is reduced drastically, right, up to 90%. So and it'll apply differently for different economies, because obviously there's certain markets where they get majority of their tax revenue through custom charges or tariff charges, and then there will be maybe other markets that are slightly more developed that would have less reliance on tariff charges that they apply. So and that's the process that I think the FTA has been going through, which is now I think in the phase 2 of it, to make sure that the regulations, or they regularize the process across, so that the reality of FCA is realized without really compromising one economy over the other. So I think that would be the view. But then I think generally from a growth perspective, South Africa will definitely benefit a lot, given that South Africa is slightly more industrialized than most of the countries on the continent. So therefore, if you then are able then to do transactions far much cheaper, and then you're able to export to new markets, and then obviously foreign direct investment comes in, and then the infrastructure to support that is there, then obviously you benefit ahead of others. And I think that's where this position that South Africa sits in relative to the others.
Okay, yeah, it's obviously a whole implementation process, and some people say at the end of it we will have one currency for the whole continent. I don't know. I don't know if that's going to be happening, if it's realistic, when that would be. Does any of you have any insights in if this is ever going to happen? Are we going to get an African currency for all of us?
I can touch on that. I mean, we're talking about welfare gains of 16.1 billion, with African Free Trade Agreement. It wouldn't be such a bad thing, if we had it. How feasible is it? I think it's more long-term. The Europeans have done it with the euro. So I don't think it would really be a bad thing for Africans to start thinking of a single currency, because it would just simplify the way trade is done across Africa. But I want to put a couple of years on that before it actually comes to life. But personally, I don't think it would be a bad thing for us to have a single currency.
I think Karen has put it very nicely. I would have said maybe not in our lifetime, but that is the ultimate goal of a single trade and economic area, right? Is to then have a single currency. So if that happens, then perhaps it have that propensity to then raise a lot of the challenged economy within Africa significantly up. And I think that is one of the desires of the Continental Free Trade Agreement, which is then to increase the credit rating of Africa, and which would indirectly attract investment into the continent. So I think that would be the ultimate aim, but it's clearly a long-term push. Mosa, sorry.
That's fine. I was about to say that I think that perhaps a system that Karen spoke about, right, that was implemented by Afreximbank, I think it's a good foundation, right, for us to start from. As we then progress, eventually, and hopefully we'll get there. So I tend to agree with my colleagues that it might not necessarily be in our lifetime, but certainly the direction of going there is quite clear in terms of what the continent is trying to achieve for its own success.
Okay. Well, let's be optimistic. We're all still very young, so who knows what will happen in our
I'm very young, Joel, so I can see it in my lifetime.
You see now, yeah. We've got a question from Edward Grossi around frauds. Do you see trade finance fraud being an issue in Africa? Do you have, and I suppose let's link it to the trade area, right? Does it play a role in widening the trade finance gap? And are there any solutions in place to tackle it?
Yeah, if I may maybe try and take that up, right? So I'm sure we've heard, the term blockchain, right? A few times. And I think with the emergence of fintechs and the platforms that we see coming through, with the aim of using data and creating data in integrity and addressing the issue of fraud in terms of authenticating the underlying documents, data, etc. I think for us, or for me, where I'm sitting, is that with the right implementation, of course, that will help reduce the issue of fraud a lot. But I think also one needs to also apply, call it the current lens, right? The latest ICC trade finance report looks at defaults and fraud and all of that when it relates to trade. And if you look at the numbers, still quite low, right? Under 1%, pretty much sitting a worst case scenario, sitting at about 0.5% in terms of fraud or even defaults in trade finance. So again, something that sometimes can be magnified to say there's a lot of fraud and all of that, but then in relation to what, right? So trade is still quite the safest place, from a finance perspective. What really is left for all of us, and I think Dapo touched on it around, ensuring that the liquidity, because of trade, is predominantly USD, right? So the liquidity is available to be able to execute, so that as part of closing the gap, right? And I spoke about blockchain and the data integrity and being able to converge that data and use that data to inform decisions around financing trade. I think that's the right direction. That's where we're going. And I think there's a lot of comfort from financial institutions and also other industry players around, where we are in terms of the world of trade, at this stage. So we're not too worried about fraud. Yes, it's there, but then it's not as astronomical levels as people would tend to sometimes put it.
Yeah, maybe I touch a bit on it, Joel. If you look at the financials of most of the banks in Africa and banks that has African strategy, if you look at the area of their cost of risk, you will see an uptick in terms of what that means and the implication of that on their balance sheet and P&L. And I think, as you rightly put it, a lot of investors within the African continent are then concerned around this increased cost and how that then impacts their ability to price within the African market. And even at the base, maybe even cover their cost of equity. So thinking about that and the additional cost of KYC, AML within the African environment, becomes it then hard to the cost of doing business within Africa. So where would you rather go, high risk or low risk area? So one then will start to track low risk area, and that take a bit off the fund that would have naturally come into Africa. Fraud in its component, albeit very small, especially when it comes to trade, but it's also a component in that cost of risk, right? So it's something that as African Bank, we'll continue to track. We'll continue to put resources in place to ensure that we safeguard the businesses and funds of our clients, which is very important to us.
Great, I like that. Maybe lastly, because Mosa mentioned blockchain, Karen, I don't know if you want to just chip in with what exactly the meaning of blockchain is in this in the free trade area context, because for many of us, me first, it's often a term that gets used and it sounds quite modern and sexy, but we don't quite understand how blockchain actually helps. So maybe you can just help us there a little bit.
I can touch briefly on that, Joel. So basically, it's centralizing information where there's so much transparency that it is hard for someone to be able to fudge because it's in a centralized hub. So chances are of people changing that information are slim. You know, so it's basically a consortium of people who agree to come together and say, okay, this is what information we want to put out there. So everyone sees it, and for it to be altered is really slim. So I'm simplifying it just for people to understand it in that regard. The one thing though, you know, just looking at the time is someone asked a question about SMEs, you know, which to me, I think is quite important to just touch on as it relates to the African Free Trade Agreement. SMEs are a big part of the African market. You know, we cannot talk SMEs without talking Africa. And if we're talking about welfare gains of 16.1 billion, SMEs are really going to be the heart of removing people out of abject poverty. And we're talking about 30 million people. Absa on Monday had SME Day where we just talked and tried to help SMEs, because when SMEs come to request formal credit funding, 60% actually are rejected. And it's because they're not readily preparing themselves to come and ask banks. You know, they're not crafting their stories right. They don't have audited financials, you know. So us trying to prep SMEs to make sure that they're following the right steps. So by the time they come to a bank like Absa, it's a smooth sailing, and funding from a trade and working capital perspective is almost seamless. And that just helps build that, you know, trade element in the grander scheme of things. You know, I wanted to touch that because I'm conscious we have 3 minutes, and it's a passion that, you know, us Africans need to address, because it really is one of the biggest foundations of the African Free Trade Agreement.
Yeah, thank you so much for bringing that in. It was definitely one of the outstanding topics to discuss. I saw Slankla came with a question around agriculture and food processing and the role that Absa could play there. Well, I think it would be great if I can put Slankla in touch with your team, because it's really like a technical discussion where you guys can chat a little bit offline after the webinar. But thanks for raising that, Slankla, and please give me a shout if you don't get hold of them. But that also brings me to the end of the webinar, where I will put the contact details of these lovely people up on the screen. I think it's been a very rich conversation, and I think as we all gathered from Karen's enthusiasm just now, we can probably talk for another hour, especially when we start talking about SMMEs and the role that we can all play to make this continent a better place. The nice thing of talking with bankers about the continent is always like there's a lot of optimism, and that I think that is the right way that we should approach these conversations. So I'm going to thank Absa CIB for making this webinar possible. I'm going to personally thank Mosa, Karen, and Dapo for your time and your insights. Hopefully some people are scribbling your details now, but we'll also be in touch with all the attendees and people who registered and couldn't make it with the replay of the webinar, as well as the opportunity to let us know if you want to be if they want to be in touch with you. So hopefully that leads to some more beautiful trade finance in the future. yeah, with having said that, thank you very much for your time. Thanks for attending, everyone who was in the room. Thanks for the engagement on the chat, and we look forward to seeing you at the very next webinar, which will probably happen next month. Thank you very much, and have a great Easter.
Thank you. Thanks, everyone.
Thank you. Cheers.
Cheers.
Thank you, everyone. Bye.